Good morning, Alex Cole, on this fine April 21st. How are you doing, my friend?
I'm doing very well, thanks. Good morning. How are you? Nice to have you back.
Thanks, buddy. I missed you last week, but it was a wonderful trip with the family. Unplug, recharge. We hiked more miles than I care to count, but it's good to be back as well. And happy to check in on the markets. Let's dive right into the charts. Alex, what are we looking at here from an asset class heat map perspective?
Yep. So as we normally do, we tend to start by taking that top-down approach and looking at the asset classes, and we've recovered quite well coming into the end of this week. Equity panel in the top was showing some real weakness, where we saw several go fish bars at the end of last week and into the beginning of this week, but we've recovered well and are showing blue go bars again now today. Treasury bond prices still in that strong no-go. That's really an obvious no-go trend. That's all in relation to rising rates. Of course, the prices move inversely to rates. So we've got bond prices there in a no-go. Mm-hmm. Commodities strengthened again the last few days in a strong blue go trend again. Dollar still maintaining that go trend. And Bitcoin's really been up and down, so we're looking.
Imagine that volatility in the cryptocurrency space.
That's right. Yeah, absolutely.
Yeah, the Treasury bond sell-off, the rising rate environment has caught a lot of attention. Our good friend Jim Bianco talking about just the pain and suffering for those who do own short-term treasuries. Looking at that on a historical perspective, it has not been this awful in 40 years. So, Alex, we're talking about that recovery in the S&P 500 in terms of U.S. equities. Let's dive into the SPY and just see what's happening from a price action perspective.
Absolutely. So this is the chart of the SPY. We saw that strong no-go correction. We saw the oscillator break above zero, which then led to some amber go fish bars and back into a go trend. And then we really sold off the next couple of weeks. We saw that, I think it was a historically fast 10-day rally.
Correct.
And then we saw a really strong sell-off, which actually pushed the oscillator back below zero. So we were watching in this area to see whether or not the trend broke, or whether or not the oscillator would get back below zero. And it was worrying for a while. It didn't seem as if that was going to be the case. Mm-hmm. Right now, though, we're looking a little bit better. We've got blue go bars again in the price panel and the oscillator at zero, testing zero from below. So this is going to be critical. Mm-hmm. If the oscillator gets turned away here and finds resistance at the zero line, this will threaten this go trend again. But if it can get back into positive territory, then for at least for the near future, we'll be all right in this go trend.
Yeah, as with all responsible technical analysis, there's the objective, there's the quantifiable, and there's a lot of computation happening behind the charts in the go-no-go space. So when we're thinking about the weight of the evidence from a trend perspective, we're seeing that we're in a go trend. But of course, there's always going to be some interpretation to the analyst and to the trader. Alex, what would you want to see, from a trade perspective? What would you want to see happen with that oscillator in the bottom panel to really give you conviction in the U.S. equity space?
Well, we definitely want to see it get back above zero, right? So the zero line we know and we use as an objective level of support and resistance when a security is in trend. So for a go trend, when a go trend is in place, this oscillator should be finding support at zero and staying in positive territory. Mm-hmm. So when it doesn't, that was a cause for concern. Now, if it can get back above zero, then, to me, this looks like a higher low from where we were back here. And we already had a higher high. Mm-hmm. So sort of on these intermediate swing highs and lows, we've got a higher high and a higher low. If we can get back above zero on the oscillator, that would be positive, I think, for the go trend.
And then what would be your perspective on volume? So just a quick refresher for those of you who've been watching the GoNoGo show every week here on StockCharts TV. When that oscillator switches from the green to the blue color, that's showing us some higher relative volume. We've had really light volume throughout this range-bound choppiness, correct, Alex?
Yeah, so it was a lot more of a positive breakdown here on this no-go when the oscillator turned to the darker blue. That was really market participation. That was people buying into the fact that things were not looking good and we were entering into a new no-go trend. And there was a lot of heavy volume as prices traded down. Like you said, the second half of this range has been very, very lightly traded, right, relatively speaking. So we still are seeing light volume. If we get back above zero and prices move higher, of course, we'd love to see the oscillator go to a darker blue as well, which would then confirm that stronger price action.
Fantastic. So let's dive under the hood within the S&P. Let's take a look at the sectors, not just on an absolute basis, but on a relative basis, looking at how they've performed from a trend perspective against the benchmark index. So this is each of the S&P 500 sector ETFs relative to the index as a whole. And looks like this story remains pretty unchanged, correct?
Yeah, there's a few things creeping in that are like a discretionary has strengthened over the last couple of weeks. So that second panel here, we were looking at these top three as really being a drag on performance, relatively speaking. Technology, discretionary, and communications. Technology and communications still in no-go trends. Discretionary has been trying to sort of come back and play with go trends. So that one's a little bit of a difference. But then generally speaking, the leaders remain the same. Energy. We're looking at materials, healthcare, staples has come back into a go trend, utilities, and real estate. So it's a more defensive picture still than we'd perhaps have seen in the past, with those more discretionary sectors really struggling at the top.
Absolutely, and obviously we know there's a bull market somewhere, but seeing that defense is on the field while the U.S. equity indices are in sort of a choppy area, that's really helpful to understand the nature of the trends. So let's move right on. Let's start with something that's been showing some weakness. Obviously, a little bounce this week within the XLK, the U.S. Information Technology Sector ETF. Why don't we look at that from a price action perspective?
Yeah. So recovering this week, but clearly underperforming the market as a whole. The market as a whole staying in a go trend. The technology sector unable to maintain this go trend. We saw no follow through, no green go trend continuation icon, which we would have been looking for when the oscillator hit the zero line. We'd have loved to have seen support there and a trend continuation icon. We didn't get it. We went back into amber bars and a no-go as the oscillator went below zero. So right now we've got a couple of amber bars again. This could easily go. It could go one way or the other, but we've got the oscillator below zero. We'd be looking to see what happens if it tests the zero line again. But a slightly more bearish picture, obviously, than what we're looking at on the S&P.
Absolutely, and growth equities in general have tended to face really strong headwinds in a rising rate environment, and we've seen that historically. So it makes sense that as we are seeing treasury bonds sell off, seeing rates rise, that some of the growth equity sectors like technology have really struggled. Let's look at an individual name catching all the headlines this week. Netflix, interestingly, had a great conversation yesterday with a TMT analyst for the CMT Association's Fill the Gap podcast with Dave Lundgren. And Laura Martin has been on a sell recommendation, wildly unpopular, actually over the past 2 years. What we've seen this week for Netflix has been really disastrous as the rest of the investor universe is catching up with what Laura saw long ago. So from a trend perspective, Alex, let's just talk a little bit about, for those who play to the short side, if you were looking to capture some alpha with a short trade on Netflix, how would that play out? How would you use these charts to your advantage?
Well, we had this no-go flagged in early December for Netflix, and we saw a strong move down. And then this is how we like to look at it. We see the no-go identified, and then we watch the oscillator as it hits the zero line, right? So the no-go now being in place, we expect the zero line to be resistance. A squeeze built up, which showed us that there was reduced volatility, but then indeed it did roll over back into negative territory. And that's when we get that no-go trend continuation icon, this red circle here, a little bit after this no-go had taken hold. And then, of course, we had that massive gap down in January. and people sort of asking, should we fade that? And is that, is that the bottom? Is that the low? Well,
Right.
it's tough because we're going to expect that gap to act as resistance anyway. It rallied a little bit, but wasn't able to get back to the top of that gap. The no-go stayed in place, and then we got another massive go-no-go squeeze build, and then a no-go trend continuation icon in this area of the chart. So after this first big drop, and then we continued to get these no-go continuation icons as price moved, slowly lower, got above zero, tried to get out of the no-go trend, couldn't, more no-goes, and then we get one more final surge of momentum. Remember, this is really what the oscillator is telling us. When it goes back into negative territory, it's telling us that we're seeing resurgence of momentum in the direction of the no-go trend. And so we get one more no-go trend continuation icon and then this massive gap down. So right now, we're at oversold levels on heavy volume. So, will it find some support? Will it sort of consolidate as it did the last time? That remains to be seen. But if you were in this no-go trend on Netflix, you've had a couple of really, really nice moves.
You said two things that I just want to add some paraphrase and clarity to. The first was just the basic technical concept of a gap being refilled, but finding resistance at the top end of those gaps. And that just comes down to the human psychology. If somebody got caught in that and they were holding, they want to get back out, get their position filled at a break-even level. So we've got overhead supply, even if we were able to fill that gap. Second thing you pointed out was that there's a lot of speculation about whether or not that's the bottoms in. We saw enough destruction in the price action to actually fade that short and looked for the chart to trend higher. And here at GoNoGo Charts, we are not about forecasting the future. We want to react responsibly and quickly to the information that the market is giving us. So the way that we're using these charts is not to forecast what should be happening, but to put probabilities on our side to trade with trends, and then just wait for that weight of the evidence to indicate to us when that has fully reversed. So, yeah. Alex, yeah.
One of my favorite sayings was always, as I was learning technical analysis, was don't let the bottom of the chart fool you into thinking that it's support. And don't let the top of the chart fool you into thinking it's resistance, right?
Yeah.
Just because we're at this low, which looks like, oh my, it can't go any lower. Well, there's no lower, there's no limit, right? There's no limit up or down except for if something goes to zero. But that was always something that I always took with me. The bottom of the chart is not support, and the top of the chart is not resistance. And then when I first started working at Bloomberg, we still had people that remembered hand drawing these charts with pencils, and they would fill up the whole walls of offices because they would just be adding paper as the prices went higher. So there's no resistance level at the top of a chart, no support level at the bottom.
Famous story, Ralph Acampora in the war room at Prudential when Dow broke 10,000. He said it literally went through the roof. And what he was talking about was exactly that. The paper charts on the walls, they hit the ceiling and had to double over and keep it going. So yes, do not confuse the bottom of the chart with a support level. Thank you for that, Alex. Always appreciate the education that comes with these shows. So getting out of the tech sector and Netflix, let's talk about some of these defensive sectors that are working, in particular materials. I don't know for anybody who is watching that may have gone through any home remodel over the last year, but you may have noticed that those 2x4s and plywood are costing a lot more. So the XLB, the material sector of the S&P 500, clearly showing some strong go trend conditions. Alex, walk us through this chart.
Yeah, and just another interesting, hopefully it's interesting for people, but another interesting story. I was trying to get my deck rebuilt in the back, and I've always wanted that polywood stuff, but it's always been so much more expensive than wood. But, the prices of lumber now have really brought that into play. This sort of last forever, will never rot, guaranteed forever kind of stuff. And it's become an option because the prices of lumber have just gone through the roof. So, yeah, absolutely. Home renovations, things are getting more expensive, but this is the XLB chart, and we saw these go trend continuation icons here as the oscillator found support at zero. So this is what we're always looking for. Go trend in place, and then support found by the oscillator, giving us those situations where we can fairly confidently say momentum has come back in the direction of this go trend. Excuse me. And you can see how this movement of price is a lot different from what we were looking at with XLK and what we were looking with the S&P, where they were really correcting more and the go trend being threatened more heavily and the oscillator below zero. So this is a much better, more strong picture that we're seeing in this sector.
Yeah, a lot more constructive evidence happening for the material sector. Alex, I noticed on the final bar of this XLB chart, we've got a red counter trend correction arrow. Just talk to us a little bit about how you would use the oscillator in a traditional capacity and what that data visualization tool is cueing you into right now.
Yeah, so we all have learned about the way to use momentum oscillators, and that is that when prices move too fast in one direction, it helps us identify those situations and expect some sort of reversion back to a mean or some sort of cooling of price. Because if the velocity of price change has been really fast, then we will expect some correction against that move. And you see it here. When the go trend was identified, we saw this really strong run, and then we see these counter trend correction arrows appear, which are telling us that in the short term, prices may struggle to move higher. Now, it doesn't always mean it's going to correct. It doesn't always mean a reversal. It means there's a consolidation of some sort. And also, we all know also in a really strong trend, you can blow through overbought conditions on an oscillator. So we need to keep in mind that the most important thing we're looking at is the trend. But that's what these are saying. And the reason they appear on the chart is because the oscillator has hit overbought territory and then come back into neutral. So you can see after this last run now in price, we're seeing that the oscillator went overbought and has come back into neutral territory. So this go counter trend correction arrow is not telling us the trend is necessarily over, but that in the short term, we may struggle to move higher.
Absolutely. Great explanation. Thank you, Alex. And so if we're going to dive into the materials sector, let's look at an all-American company like US Steel. In terms of the construction industry, USX is the ticker. And let's look for perhaps a little higher beta play than just owning the sector ETF.
Yeah, I think the ticker is just X, but
excuse me. Yes.
We're looking at this one really closely because obviously a big company in that sector, and you can just see the sideways movement in price here. Having that rally, we saw the counter trend correction arrows telling us, hey, in the short term we might struggle, and we've really seen price volatility shrink on this chart. So this is a really interesting chart for us. We saw the GoNoGo squeeze build to its max. We saw the oscillator find support, just barely break out of that squeeze, giving us this continuation icon, and then it's gone back to zero where it's stuck again, and we're going to watch to see if a GoNoGo squeeze builds. But we often see multiple trend continuation icons during consolidations, and this is one of my favorite sort of setups, is when we see a movement in price, we see a consolidation, and then we look to get that evidence of support for the trend and for the next leg higher. And that often comes in the form of multiple trend continuation icons. So we'll be watching to see if the oscillator can get back off the zero line.
Absolutely. Understanding volatility for those who are familiar with things like Keltner bands and Bollinger bands, what we're really trying to understand is that tug of war that happens between buyers and sellers and the human behavior that's evidenced here on this chart. So when we break out of a volatility squeeze meaningfully, and we see momentum in one direction or the other, right? From this point, Alex, we want to be aware of both possible scenarios. Right. We build another squeeze and then break to the downside. That's also a possibility. All else being equal, we assume trends to stay in place until they end. For just a little more perspective, could we look at this on a weekly basis? Just to see where U.S. Steel has been coming from.
So on a weekly basis, steel has broken out of a long range. So significant move higher here, and then a really long sideways range, some choppiness on the weekly trend in price here, but we've broken above this long-term resistance level. So on the weekly chart, this is a strong picture. We see this sideways action on the daily is really this small little movement sideways here. But if you can just see the crosshairs on my mouse, you can see what a strong level of resistance that was, that we're now consolidating above.
Absolutely. And so obviously some recovery out of the 2020 pandemic lows, range bound throughout 2021, and just setting new highs here in 2022. So great to see on the material side. In the last few minutes of today's show, let's take a look at utilities. Perhaps not the sexiest sector of the S&P 500, but certainly one that is outperforming, as we said, defense being on the field. Let's talk through this on a daily basis first, and then we can jump back to a weekly.
Yeah, so the utilities chart looks very very strong, very similar in some ways to what we were looking at with materials. Strong rally, consolidation, which has been shown by this counter trend correction arrow. Same thing here, another strong run in price, counter trend correction arrow telling us that we may struggle in the short term, but the oscillator continuing to find support at the zero line. So we're looking at these, if these trends are to continue, which is what we assume, right, until they are broken, or until we see enough evidence that the trend has not been able to continue, then we're looking for opportunities to get in at these points where there is consolidation. So all the way through these trends, as price moves higher and corrects, these are buying the dip opportunities as long as the trend continues. So we're looking at some of these sectors like materials and utilities to find opportunities to perhaps get into that trade. And if you go back to the weekly, which is what we had on here before, you can see that this is actually a stronger trend than perhaps we saw on the materials chart, because we're getting movement higher, correction, movement higher, correction, movement higher, correction, movement higher, correction, a series of higher highs and higher lows, with the oscillator predominantly supported by the zero line. So utilities looks like a place where, all else being equal, like you said, if the trend continues, we can look for opportunities.
Absolutely. Very well said, Alex. And for trend following investors, we know that we want to cut our losses short. We could take a small loss, no problem, as long as our winning trades really outperform. So that profit ratio of winners to losers has to be large. And the only way to do that is to be a patient investor and to stick with trends that are truly in place. So decide what your time frame is. Using GoNoGo Charts, you can be that patient investor who can hold on to things through the bulk of that move and really capture the full upside. Alex, in closing, last chart of the day, NRG. Let's take a look at at an individual utilities company.
Yeah. So this is NRG on a daily coming out of the utilities space. And this is what we were seeing at the beginning of the week. We were seeing this fresh go trend and then a go trend continuation icon on the Friday bar of the week before. So we were looking at this on our Monday note as perhaps something that could play catch up in the utilities space. Remember, there's like you said, you've got to put the odds on your favor, and you've got to line up your decision making in a way that gives you an intelligent framework within which to invest, right? So if you're looking at weekly utilities and saying the weekly utilities trend is in place, then you would be looking at taking the buy opportunities on that smaller time frame. So if you're not so much necessarily worried about the no-go correction in a security such as this, but if it comes back into trend, the larger trend in the sector and the larger time frame trend are in place. So perhaps you're looking for opportunities to get in whenever you see something bullish or something in that go space coming in. So this is not had the same kind of run as the utilities sector itself, but has come back now fairly strongly. Go trend identified, consolidation, support at zero, trend continuation icon, and then it's strengthened this week.
That is such a confluence of opportunity. Really well put, Alex. The multiple time periods, the strength in the sector, both on a relative and an absolute basis, and then we look for the individual names, and we can manage the trade risk using GoNoGo Charts as well to enter in Go trends, watch that momentum oscillator. So really stacking the odds in your favor. Thank you so much, Alex, for today's walkthrough on the markets. I know this all went out in our research subscription Monday morning to all of our institutional clients. To learn more at GoNoGoCharts.com or check us out on StockCharts ACP so that you can get your hands on these charts as well. Alex, big week next week. We're going to see you in Washington, D.C.
Yeah,
49th annual CMT symposium, correct?
Yeah, looking forward to going back in person to a CMT symposium. Very excited to take the trip up to DC, and it'll be good to see everybody.
You know, Alex has been a presenter at past CMT and MTA conferences, and it is always such an incredible opportunity to just learn from the masters, from the veterans, and I'm sure you've got a lot of stories to share with our audience in the coming weeks about, you know, having Alan Shaw and Ralph Akampora in the front row of your sessions and getting some feedback from them.
You're always wondering what kind of questions somebody might pose when you're giving a presentation at one of those events.
It's a pretty unique thing to see that everybody in the audience could just as well be presenting or has.
Right, absolutely. Yeah.
All right, Alex, thank you so much. Travel safe. I will see you in 3 dimensions next week. And for all of you who are watching here on YouTube, make sure to also check out StockChartsTV.com to grab these shows on demand. We'll be with you every Thursday at 3:30 Eastern. Thanks so much. Stay safe, be well, and we'll talk to you soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.